The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, let's take a look at Thursday's market action. We saw pressure in soybeans, soybean meal. Corn also had a little bit of a lower day. Wheat tried to find some green. Cattle futures, again, under some pressure as well on Thursday. Plenty to take a look at as we are nearing the end of the week and the end of the month. Joining us now, Brian Doherty, Senior Market Advisor with Total Farm Marketing, is here. Brian, good to catch up with you again this week. Hope all is well up in Wisconsin. Looks like a little bit warmer, at least the last few days.
Yeah, really nice out today. I stepped outside for just a minute, and it was probably 35 and sunny, and just felt good. Need some sunshine, so we've been lacking that. We had that, of course, that real deep cold stretch last week, and that was, I think we were looking at one point here anywhere from 4 or 5 below in the southern part of our state to about 20, 26 below in the northern part. So it got pretty brutal there. Interesting day in the grains, Jess. Some turnaround, let's call it Thursday here, down 4 to 6, almost 7 in corn. Beans, a little bit pressured here, down about 15. So I think two things have happened. One, again, another wave of farmers selling. Talking to a lot of farmers have said, I'm selling more, or they sold some more. To a little bit of uncertainty with what might lie ahead with tariff talk. And I'm not sure where that falls. So I'll just cut you at the chase there. I'm not sure what next week might look like. But also some talk that the weather might show some improvement in South America. Now, if I read you what I read was the forecast this morning, it looked like it's continued kind of wet in parts of central Brazil. Just talked to a farmer who had boots on the ground there, and they said, I don't believe that too much. I've got a good looking crop. So we'll see what that looks like. But Argentina stays on the drier side, scattered rains only.
I wanted to ask you, I was looking at this corn market. It looks like we got record open interest, or near it at least, is what I had been seeing and reading. And I think about us, look at the calendar. We're at the end of the month of January. We know funds are very long in this corn market in particular. Have to wonder, could some of this be attributed to just some of that classic position squaring near an end of a month?
You've got not only end of the month, but you've got a few other things that kind of loom large. One is you've actually got a rally in the market with the fund buying very aggressive and very strong, and 300,000 plus contracts long, not record, but in that upper tier. Upper tier gets up to about 400,000 long, but contrast that to 350,000 contracts short. That is a lot of buying over the last several months. And it's been on the heels of, we talked about this before, really good value. Corn is cheap. Remember, we talked about end users. There's no reason why they shouldn't be buying it hand over fist. And then I was kind of snarking my remark and said, if they push back and say, well, what if it goes lower? I tell them you buy more. That's your job. Secure that stuff cheap. It's cheap because it's lower than the cost of production. So I think you had a lot of value buying and speculative value buying, thinking there's limited downside. The market starts to move up. Think about it. You got a series of friendly USDA reports. And so you, at the same time, you're declining or decreasing the supply, increasing the demand through higher exports and higher ethanol, and you're lowering yield near 5 bushels an acre. So I think that helped to add the momentum to the managed money buying and pushing prices higher, and end user buying. That is, look at the export markets. Good numbers again today, right? So 53 million bushels, really impressive there. Year to date, very strong, encouraging numbers there. 28.5% ahead of a year ago at this time. That's pretty impressive. Year to date totals, really strong. So the USDA is forecasting 2.450 billion, and right now the corn sales are just about 70% of that. So it's a really good start to a marketing year.
How about this soy complex? I know we got some different fundamentals here that we got to watch, but I know, to your comment earlier, farmers selling. I have to think there's more corn out there on the countryside than there is soy, but even looking out to new crop beans, for instance, some actionable levels here, I feel like that maybe some folks have taken advantage of. I guess just your perspective a little deeper here into this soy complex as a whole, Brian.
Yeah, so if I were to kind of step back, to your point, I think there should be less beans in farmers' hands, and there traditionally is because a farmer doesn't want a half a bin of beans, right? So he likes to store corn, maybe more so than beans, and for a variety of reasons. But beans offered, you got to keep in mind, if we go back and look at value, remember beans are offering $12 plus on the board for some time a year ago, a little over a year ago, and corn is offering their $5. But you kind of figure just in roundabout numbers, even at $12 times 50 bushels an acre, you can see you've got some revenue there that make some sense, right? If you're 60, 70 bushels an acre, you should be selling, and farmers traditionally are a little lighter on beans relative to corn. But the bean market there's two ways to look at this. One is the world's a swim in beans and doesn't need all these extra beans. On the other hand, think about the U.S. numbers from the USDA. Carryout is 380 million. There is I think, a high likelihood that when you look at that ratio between the price of beans in November divided by December corn, you got a 2.27. Jesse, that doesn't buy bean acres, right? That's buying corn. If you buy 3 million acres of corn, and I think we went through this math maybe last week at 50
Mhm.
bushels an acre, it's 150 million bushels. Carryout, remember, dropped from closer to 500 million to 380. Now you could potentially see next year in the low twos, 230. So it seems to me that beans for the new crop are either undervalued or they just don't really feel they need to buy the acres and can absorb it through the world production. There may be some truth to that because of Brazil's continuous increase in production and China's strive to produce more as well.
How about over in the wheat complex? Green there on Thursday. It seemed like maybe we unwound some spread action a little bit. I'm curious your overall take of the wheat market right now, Brian.
Yeah, so I think you're not only seeing some unwinding there, but keep in mind we've been saying for several weeks or maybe even a couple of months that the Russian crop looks like it's in pretty rough shape, 35 to 40% poor. Well, they've been the world's leading exporter of wheat for some time, and all of a sudden you're talking about a 13, maybe a 20-year low in production. So you kind of, excuse me, you kind of set the stage with Russia uh, unlikely to rebound and produce all these bushels, for something to come along and sort of trip the trigger of wheat. Now, is it just this unwinding of some spreads? It certainly does look like it, but keep in mind we had some really nasty cold temperatures last week, and there's a lot of wheat exposed. And talk on the street is 10 to 20% was damaged in some capacity. All of a sudden, it's not quite ideal. So it'll be interesting to see how wheat comes out of dormancy and what it looks like. Generally, the freezes are overplayed in the market, and people put too much stock in those. But the market really didn't move a whole lot uh, until 3 days ago, and the cold weather was actually 4 and 5 days ago. So we'll see. But I'd like to see that export market pick up. That's the one that just is plodding along. A higher dollar versus in recent history does not help that situation.
Let's go over to the cattle market trade. You and I were talking about this before we went on the air. Just kind of looking at the cash activity, and we're starting to get some of that pickup here towards the end of the week. Yet futures in the last two sessions have kind of pulled back here. So I wonder, are we starting to get a little divergence between cash and futures again in cattle? What's your thoughts as you're looking at this
Mm,
complex?
Maybe some divergence or actually convergence here. You might argue now that the board is a little bit under the cash, right? So I'm not sure what cash is this week, but let's call it 205 to 210.
Mhm.
And the grade at about 330-ish in that area. Cutout values were softer this morning by quite a bit in select. Select was over down over $4. So that kind of set the tone for a second day in a row down. So yesterday you had a new high scored on the February contract high, and that came into play at 209.35. Finished the day 207.02. That's a pretty good dump from the high, and then today the market finished down 255 in Feb and 345 in April. So there's there's no doubt that if traders were long this market, they caught a really hard swing higher. No doubt in my mind that they ran sell stops up underneath the market. And remember, those are what I call unintended selling. That is, they're placed there if the market starts to drop to either sell to exit a long position or sell to establish a short position. But they're not executed until the market is dropping. So anybody who puts a sell stop in is probably hopeful that it doesn't get hit. But if it does, now it's intended. But until it was, it's kind of unintended. You're not expecting that. But it adds a little pressure to the market. I think we want to go back to what you and I've talked about for a long time. And so far, it looks like my analysis of this has been wrong. I just didn't think we'd come into the first of the year. I didn't see much of a chance to see prices jump higher because I was looking at, I think, a demand market that had me very concerned. They've jumped higher. So good disappearance over the holidays, short Bart Packers pushing the market higher. I think the Packers are probably getting squeezed pretty hard right now with these higher values and trying to find cattle.
Brian Doherty, Senior Market Advisor at Total Farm Marketing, is with us here today on the show. Looking at this cattle complex as a whole here as we think about this, and to your points, it just doesn't seem like, the other shoe is quite ready to drop. But I will say, as a devil's advocate to that point, Brian, we know that when it does, it'll drop hard and fast. I mean, we've seen this how many times before in history.
Yeah, so it's ironic when you see a market really kind of pushing the new highs. It'll do so sometimes violently, as the let's call it the exhaustion of traders. Buying and buying and buying. You exhaust buying. Those who bought are making money, so they continue to buy. Buy stops are triggered. Those who sold along the way keep getting beat up, so you don't have as many sellers in there. So it helps the market to keep pushing and pushing hard and pushing heavy. But at some point it just ends, and it usually will end on some in the livestock on some kind of a spike with what we call a V top. That is, the market goes up and then it comes down. It's very likely we could be seeing a V top in a longer term high place in the market. And it's not from a lack of, or it's not from increased supplies. It's just from my concern that the consumer this is a tough product to buy right now. It's expensive. And with the lag between cash price and when it actually gets pushed down into the retail market, consumers are going to have a tough time in February, I think.
A good point. I couldn't agree more with you there. How about the dairy trade? What are you watching over in the dairy parlor this week, Brian?
Yeah, dairy has been one of the more volatile markets here as of late. So it crashed really hard on a head and shoulders formation. That's just a formation on charts that if you're a chartist, you were a seller. And it got beat up pretty hard. And then here in the last 4 or 5 sessions, just roared right back. So roared back about 5%, lost about 5 to 7%, roared back about 5%. But it's really not going anywhere fast. It's still at the same price today as basically that it was in early December. So you've got a market that's been higher and been lower. It's trying to find itself a little bit here. It's trying to figure out if holiday demand was strong enough to sustain a rally, and or if Super Bowl buying is strong enough to sustain a rally. And so I like the bounce back. My guess is we saw some bump in cheese prices. You did see some cheese buying. My guess is to shore up inventories into the Super Bowl weekend. Beyond that, I'm a little bit more concerned that big picture is it's not bullish. It's not necessarily bearish, but it's just not bullish. Last milk production report, some adjustments there, nothing major. But it didn't show. It didn't show like a big drawdown in numbers. And until you see some kind of a bigger drawdown in numbers, than what we have been seeing, I think you got a market that's supported, but probably has a limited upside potential.
We've kind of stopped talking about bird flu in dairy cattle, yet, we have more cases in chickens and poultry flocks, and everyone's talking about egg prices soaring and things like that. But we haven't really been talking about the spread of it in dairy cattle here anymore as of late. I just wonder if that's something that's lingering in the background of this dairy market, Brian?
Oh, it's lingering. It's right. So it's not headline news every day, but some big. I mean, in our world of sort of instant, back in December, that was a long time ago, right? But there's a lot of issues in December, and in particular California. So it's out there. What I think the market's still grappling with is there a a, s- a big enough issue that it's going to limit supply. So it seems to be coming or rearing its head in certain areas, and then it kind of you don't hear anything about it, right? So it's out there. So the big concern from the supply chain for product would be if all of a sudden it's widespread and it comes into play, and then the worry is, well, now the nation's milk production is going to be down 2 or 3% or more. That isn't on the table right now, but that would be something that could be a game changer for milk prices, pushing them higher.
Brian, as always, great stuff. Final thoughts from you? Anything you want to mention or reiterate to folks today?
Well, I think the cattle market is a good reflector of a market that that can push upward and do so in a big way. So make sure that you in an environment like that use the right tool to shift risk. And then I want to go back to the corn market. You've got roughly a 90-cent rally off the lows. That's impressive. Impressive in a year where you have a record yield. So maybe we don't have a record yield, but the last number said we do. So that's impressive. The world's not ready to run out of corn. The carryout number is significantly different, though, than it was several months ago. So we're not looking for the market to crater, but I'm a little bit concerned that prices could tip over easy enough. So my point is, don't get too complacent at present. Be strategic. I would continue to dribble cash sales in, and if you want to retain the ownership, make it seamless. Sell the cash, buy a call, buy a bull call spread.
Brian, if folks want to reach out to you for a conversation there at Total Farm Marketing, how can they get in touch with you?
800-334-9779. That's the best way to connect with me. Let me hear what you have on your mind, and I can do that by listening. Otherwise, Brian with a Y at totalfarmmarketing.com, or Jesse, look at our website, totalfarmmarketing.com. Got a lot of great resources there.
Always a pleasure. Appreciate the time. Brian Doherty with Total Farm Marketing. Thanks, Brian. We'll talk to you next week. Have a great weekend.
Thank you much. Have a great day.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.